Welcome, everybody. I think I'm just going to pass it over to the speakers, actually, and for themselves to sort of introduce themselves and a bit about what they're doing. And then, yeah, we can get straight into it.
Great. Hi, everyone. My name's Molly Graves. I am based in Chicago, and I'm so excited to be here in Mexico City. It's one of my favorite places in the whole world. Most of my professional experience has actually been in the OTC derivatives market and interest rates. So I spent a long time at banks trading those products. And currently, I'm the Vice President of Business Development at Phillip Capital in our U.S. entity. So in the U.S., we focus on futures and equities clearing. So we're an FCM and a self-clearing broker-dealer. So we work a lot with IBs who offer futures products to their clients and help them access especially the U.S. markets, but also pretty much every major listed derivatives market worldwide. Over in Asia, which is where the bulk of our subsidiary businesses lie, we also do have a wealth management offering. I also would be remiss if I said that my compliance team will make me say that all of the things I'm going to talk about today, they're my own personal views, not views of the firm, and none of this is investment advice. I promise I would not be talking here. I would be on a beach if I truly knew where the markets were going. But I will do my best to share with you guys today. So thanks so much.
Oh, thank you.
Thank you for that, Molly. Good evening, good afternoon, ladies and gentlemen. My name is Shamar Edwards. I am a wealth manager or an asset manager. I'm based here in Mexico City. We have an office in Reforma. What we do is that we're a UK-based company, and we basically broker with international banks. So we have about 40 different banking partners where we help our clients get access to international banks. It doesn't matter where they are in Latin America, but they can access banks. And most of these banks are located in the best jurisdictions for banking in the world. We work with jurisdictions like Switzerland and Isle of Man, where clients can have better tax advantages. So we have those tools, and what we do as advisors is that we focus on wealth management, making sure our clients can retire safely and live off those rendimientos, as they say. And we also help our clients with small kids do educational plans, but we also help portfolios. So we can help our clients allocate portfolios in any currency in the world. It doesn't matter, and then we can help them reach most investments where some of the local banks here have a lot of limitations. So we find ourselves to be a doorway to help our clients access international investments and save on taxes. So we've been doing this for about 13 years in Mexico, and I'm from New York City myself, so it's a pleasure, but I've been in Mexico for 10 years, so soy muy bien chilango, and it's very good to speak with everyone here today. Thank you.
Brilliant, thank you. So obviously two fantastic speakers with a super amount of knowledge in this space. So I'm excited about seeing what we're going to learn today, especially about the wealth and asset management in this region, and again how brokers are actually capitalising on this client type. So I think obviously being local here, Sharma, I think I'm going to ask you the first question. So when we're looking at asset and wealth management, the sector's proved pretty resilient across the sort of a lot of global uncertainties, escalating political trade tensions. So like how actually important is it to have a wealth management for like a high net worth individual to have a wealth management? And what are like the key trends you're seeing happening across LATAM?
It's extremely important, Rob. I mean, wealth management is not only for the high net worth, by the way, but it's for everyone.
Okay.
Everyone who has the intention can make it happen. Okay, and especially high net worth people who can manage their capital and their finances in a way where it protects them from downsides in the market. We've seen a lot of trends in the market over the last couple of years, specifically technology. Like we've seen a big jump in AI and automotive services. I'm pretty sure most people in the crowd are using ChatGPT or some sort of AI functionality. And this is where the future is for a lot of the investment products that are growing really strong in the market. So I know there's a lot of traders in the audience, but even if you're a trader, you still need a wealth manager. You need an advisor. Of course, trading is your job. Your job is to get returns. But But when it comes to wealth management, we like to separate them in time segments. So maybe trading is a short or medium-term goal. Wealth management is for long-term until after you're here as well, aftercare. So we focus on estate planning, where it helps organize. You can be a high net worth person, and we can organize their finances in a better way. Let me give you guys an example. So let's say someone's net worth is $5 million, right? Maybe $5 million in cash. They can keep that $5 million. They can separate it in a way that it can be worth more when they're no longer here. So if, for example, we take just $1 million out of the 5 and put that into a product that says that if you pass away, this could be an insurance product. You can say, hey, look, if you pass away or you and your wife pass away, the family's going to get an extra $10 million, you know? So you can put that $1 million of in your savings to work, and then in case anything happens to you, your family's now getting $14 million instead of just the normal $4 million. So there's different strategies that wealth advisors that can come up with. It's just someone to sit down with you and take a look at exactly what's happening in your situation. Someone like Kempton Asset, who has the knowledge and the know-how of the markets internationally, that can give you those kind of results that make you feel secure about your future.
And Shamar, so what are we actually seeing in LATAM? What products? What are people looking at in this region?
Well, my clients in LATAM, they invest internationally. And so we've seen a lot of our clients are investing into, even if it's just the US or international markets. One of the biggest concepts here in Mexico is that it's very limited. So if you go to Santander, Banorte, I love these banks, by the way. I love all the Mexican banks, just to let you know. But if you go to those local banks, they don't give you the worldwide options for investments. Okay. They give you very limited. You can invest in any stock Mexican. You can invest in any bond Mexican, or even top 5 in the United States. But when it comes to around the world, they don't give access. So that's where we come in. And what I've seen is our clients like to invest in emerging markets. So whether it's India, whether it's Mexico itself, or just in practical markets all around the world, they can invest from outside.
Okay. And the economy in Mexico, how are you seeing that at the moment with the difficulties across the globe? Like, how's Mexico performing?
That's a great question. I just want to make sure I'm talking to. Is there a lot of Mexicans in here? Is there Mexicans in here? Somos mexicanos. Viva Mexico. I love Mexico. Of course, soy chilango. You guys know. But the trends in Mexico are enormous. Everybody in the world knows right now that Mexico is the nearshoring hub. After COVID, a lot of logistics were broken down between China and the US directly. So a lot of companies found Mexico as that nearshoring hub where manufacturers, warehouses, industrials are coming into Mexico, specifically Nuevo León. And they're coming to build up, and they want to manufacture, and they want to ship and export from Mexico. So Mexico's been being built up from that side. Just last year, we got about $34 billion in foreign direct investment, and it's quite higher than the year before.
Okay. So, mm-hmm. Yeah. No. Very interesting. So obviously that leads us on to talking a bit more about like the market volatility. It's like a constant challenge for asset managers. But like Molly, like how are brokers providing tools and resources to like help managers navigate some of these volatile markets to capitalize on the opportunities while also like mitigating risks? Yeah,
that's a great question. So kind of like Shamar talked about, right? Wealth managers, they can specialize in a lot of different things. So you as a broker, if you're a broker, and let's say, I'm going to use futures as an example. If you're a futures broker and Shamar has a client that's interested in trading futures, he's looking for a partnership with someone who intimately knows that market, right? So he is going to find a broker that understands what his clients are looking to trade. Maybe his client is a coffee producer in Guatemala. Well, the broker, if you're working with coffee producers in Guatemala, you're gonna really understand those markets, and you're gonna be able to add educational value. Whereas if you're maybe a retail trader in Mexico, that broker is going to be heavily relied upon for a lot of education and information. So something that we do for our brokers is we do a weekly trading economic calendar. And so every Monday morning at the start of the day, they're getting an email in their inbox, and it's telling them all of the different data prints that are going to hit in the US markets, for example, throughout the week. So then their customers can go and look and see, oh, the jobs report is this Friday. That's potentially going to move markets. I'm going to expect to maybe see some volatility there. Or we had a really big CPI print in the US this week. So really knowing your clients and offering that kind of expertise in a niche market that maybe the wealth manager doesn't know, I think is a really great way that you can add value and build partnerships there.
Yeah, no, interesting. So you essentially like focusing on providing like key information really to help them, make better decisions and make sure, obviously, mitigate some of those risks. As you mentioned, some like major news announcements can obviously move the market. So if they're not aware, then obviously, it can, it can help them certainly having that information. So how would you like give that information to the clients? Is it like email communication, or do you have some kind of like?
Yeah, I think a mix is great. Something like a newsletter that hits their inbox every week can be really easy. Personalized emails do well. Webinars are something that I've also seen a lot of success with, especially in a topic that people are really interested about at the time. So, like Shamar talked about nearshoring. Right now in Mexico and in the US, right, we have presidential elections. That's going to be very frothy, and people are going to want to talk about what is the peso and US dollar, what can happen if X candidate and X candidate get elected. There's a few months, I think like maybe 4 or 5 months in between those two elections, so there is going to be a lot of uncertainty in those markets. And so you can really draw your customers in with that type of educational knowledge. And that can also help you sell too, because if you're providing this free education to your customers, they don't see it so much as a transaction. They see it as oh, hey, X, Y, and Z broker is actually really interested in me and my success and wants me to know about these hot topics that, if my day-to-day job is in manufacturing, I'm not thinking about US interest rates. But maybe I have peso debt that I'm thinking about refinancing, and that broker can talk about, well, this is what the central bank in Mexico has said their plans for interest rates are. Now that's connecting it to their line of business, but it's not something they're thinking about day to day in their operations.
Yeah.
I agree with you, Molly. I completely agree with you that information and education is one of the keys to making the best decisions. And so when you want to make a great decision, you want to be well informed. This is why having a wealth manager is important. What we've seen in Mexico is that the exchange rate is it's almost 16.20 now, right? It's 16.30 something. Basically, we're at a 10-year strength for the Mexican peso, and it's been a while since we've been here. But for example, for my clients, which we usually put a goal on what we want to accomplish in terms of investments, and it's usually a medium to long-term goal. So right now, they haven't had a better time to change their pesos into a stronger currency, because it's making a great sense. You want to buy that dollar at the cheapest rate you can, and you want to hold it. So not for all your capital, but for long-term capital that you hold and allocate, you want to make sure that you're taking advantage of these fluctuations in exchange rate. And I like Molly's service does a really good job of keeping clients up to date, so that's really good. For me and my clients, it's more of a one-on-one. And so every one of my clients, I meet with them, and we meet every 3 months to follow their medium to long-term goals. And so they get bombarded with emails, of course, of information. But I like to sit down with them and eye to eye and see their families and meet them, things like that.
Perfect. So look, obviously we've talked how important like information is for wealth managers, keeping them up to date. But like, let's start talking maybe a bit more about like technology. The wealth management industry is evolving. Like, how important is it to have like cutting edge technology, liquidity, and actively managing that? Is that something that you're seeing like wealth managers and asset managers, money managers are like focusing on?
I can take this first. Yeah, I think technology is huge, right? I mean, there are certain customer bases, you as traders, right? Some of you are like, I'm not going to trade on my desktop. So if you are only offering a desktop trading platform, that's not something I'm interested in. I want an app. So there are customers there that right away you can't even get because you don't have an app as an option. I am notorious for being fickle with technology, and if there's like something opening the account that's causing me to be stressed out, I'll just be like, okay, I can't open this. I can't do this right now. It's too tough. So the technology piece is really key. I mean, it wouldn't be a panel in 2024 without talking about AI and how people should be utilizing that. I think in the wealth management space, don't worry if any like analysts are in here. I don't think your job is going away. ChatGPT doesn't do real-time economic data. Believe me, I've tried to do that and some of my stuff, and it doesn't update. But what it can be really good for is lead gen, meeting summaries, things like that, where maybe you're not relying on market-moving data, but it can take away a lot of that admin. And then when it comes to a liquidity perspective, yeah, I think clients aren't stupid, right? Our retail traders aren't stupid. They have access to understand what pricing should look like. This isn't, 30 years ago where you would call your broker on the phone and say, hey, I want to buy 2 shares of Standard Oil, and the only, price metric that you had was the Wall Street Journal that morning. You had no idea what it did during that day. I mean, clients can get real-time pricing, and so if you don't have depth of liquidity, those customers, they understand that, and they're gonna balk at you. I mean, again, I spent most of my career on a trading desk, so I had plenty of customers arguing with me over pricing, saying, no, this isn't a price that I'm taking. Like, you need to explain why it is this, this, and this. And you don't want to run into that with your customers. They're smart, and they're only getting smarter.
Yeah, no, okay, no, I think you've touched on some really interesting points there. So let's focus a bit on the actual liquidity side. So, as we find money managers especially growing, they're building, active investors. So, as they start to increase the capital on the account, do you find that they have like issues with filling like large orders? Like, is that like a problem that you find asset managers and wealth managers have? And is there enough liquidity for them for trading in big size?
Yeah, I think it really depends on what markets you're trading. At least for us, there's plenty of products that just aren't very liquid, and so our risk team will just say, no, you can't trade that. Even if a customer comes to us and says, I want to do a yard of X, Y, and Z contract. Obviously, me in business development, I'm like, yeah, of course I want them to trade that. But our risk team is like, we don't know if they can get out because there's not liquidity in that product. So even though it's attractive for us as a business, we're risk managers at the end of the day.
Yeah.
But obviously, if it's a super liquid product, then we can fill that size, and that's going to be fine. But if it's something that's a more obscure contract, yeah, that's something that we definitely have customers running into. And so that's why it's good to have multiple liquidity sources, because if our team might be too conservative to take that on, but you might be able to find another liquidity provider who sees risks differently than we do. And so then they might be able to let you and your customers trade in that space.
Okay, and in terms of, do you find it's like an education thing, or do you feel like most like asset managers sort of understand some of those limitations? So when you're having communication with them, are they open to that, or are they just, do they get upset if they can't fill orders? Like, how's the communication, or is it like educating as well?
Yeah, I think a lot of it is education, and because obviously their client is coming to them telling them, I want to trade this product. And if we're coming at them saying, no, you can't, it's never fun to go back to your client and tell them no, right? We always want to tell them yes. In sales, we're taught, just say yes to everything and figure it out later. But in financial markets, that's not really the case. We can't always say yes. And so I think it's our job, if we're providing liquidity or access to those liquid markets, is to make sure that the wealth manager understands the no, and we have a really strong case for articulating it. Because if we just give them a no, well, that's not acceptable to the customer. We have to have some type of reason on why we wouldn't allow that trade.
Okay, yeah, no, interesting. So yeah, well, obviously we've sort of gone through, starting points, I guess, in terms of like how asset managers can be supported. Like we're going to go into a bit more detail in terms of looking like the revenues of how brokers are generating. But if we like maybe go into some information in terms of like collaborations and partnerships from both ways. So in terms of like wealth management, is this like an important part of like working together, like forging sort of partnerships with brokers and with wealth managers, looking from both perspectives really, obviously the broker and the wealth manager. Is it important for both sides or?
Well, from the broker's perspective, I mean, just to be clear, what Molly and I do, we're in the investments area, but we're not in the same field. I do more long term. She does the back end for the trading platforms. So would my company, for example, or the companies in my industry work directly with brokers like this? I don't think so, because in my industry we don't place a high. I mean, in her industry, time is money. That's why technology is very important. You got to have the technology, and it kicks. In my industry, it's more slow-paced, old school, and traditional, where clients are investing and they're staying there for 6 months to 18 months at a time, depending on the strategy, depending on the market conditions. But so we have a different strategy, but there are ways of collaborations. Okay. There are ways to help each other, because even though like our company wouldn't work directly with Molly's company, but the individual and the person, the client, it's always recommended that they keep a balance in their portfolio. So of course, if they have something long term, they have space for trading and risk and everything like that, and so that's where I think that can come together from the client side. I do encourage my clients who are investing long term to, if you have extra capital and it's 5%, 10%, 15% most, you can play with it. Do what you trade it. Do what you got to do with it. You know?
Yeah. Okay. And how about you, Molly? Are you do you see like partnerships as quite an important role for brokers? And obviously, you know, how important is this sort of client type to traditional brokerages?
Yeah, so in the securities space that we work in, it's really important because we are a self-clearing broker. So a lot of your equities brokers might not necessarily be able to clear those stocks on the exchange. So they are routing those orders to some type of clearing broker that actually clears those trades. So if you are a broker that doesn't have the capacity to clear, you're going to have to partner with a clearing broker dealer to access the equities markets. We're not advertising us. You're facing the, like we're really just in the back end doing that type of process. But another thing that we see too with wealth managers is there's always referral agreements, and that can be a soft referral or an actual monetary referral agreement where if you're an asset or wealth manager and you have a high net worth individual that's interested in trading futures, which maybe isn't offered at Kempton Asset Management, Shamar can refer that customer to me. And he might get a certain percentage of the revenues that we make off of that client. And then Shamar looks good because he can say, hey, I have an offering to this product, and you can access these US markets, markets over in Asia, etc. And obviously we like it because then we're seeing that customer and we're growing our book of business. So I definitely think there's a way to collaborate, even though the industries, maybe are focusing on a little bit of different.
Yeah, okay, that's interesting. So, whenever we've dealt with money managers, there's always a sense of responsibility, I guess, looking at like the investors. How you protect those investors. Do you vet money managers coming on? How can you protect the investor while also make sure you can generate the revenues that this client type can generate for brokers, especially for the new brokers that are looking to get set up, looking at the regulation side of it, the paperwork, the investor who probably hasn't an understanding really of maybe like the FX markets or the CFD space, but wants to generate make money from the trading strategies, but so how do brokers manage that, not conflict, but make sure that they can protect the investor while also generating revenues from this area?
Yeah, I mean, for all my clients, for example, they have a risk allocation. So some people are more aggressive, some people are more conservative, and but what we focus on is protection. So number one goal is to protect the capital of the client from our perspective. So there's only a certain level of risk that a long-term wealth advisor would take, and so we basically analyze and scrutinize every investment option or even platforms so that we can make sure that, one, our clients are protected not only with the investment risk, like, hey, whether investments go up or down, but the jurisdictions, for example, like where are these accounts located, where's the investment located, or there's many different aspects to risk that we analyze before we make a recommendation. So anything new comes across our table, we have not only us but external people to look at it and give an assessment, and I think that's the best way, so that you don't become biased about commissions or anything like that. You want to give your clients the clearest and best advice, so that they can reach the goals that they told you about initially.
Okay, so essentially starting from the early stages of wealth managers, asset managers talking to clients, and then moving through the process, onboarding the client, and then obviously at that stage when the broker onboards the client, from a broker's perspective, like what do you guys do when you onboard investors? Is there like extra risk warnings that they need to have? Obviously, if you've got LPOAs on account, so like more looking at perspective from when a new broker's looking to start launching products for asset managers, like what do they need to be aware of, I guess?
Yeah, so if any new introducing broker wants to work with us, we have like 5 or 6 departments that they have to pass a check on. So one is going to be compliance, right? Have they gotten into any compliance issues, not only in the US where we're regulated, but have they had issues in other countries? As well as if it's a fully disclosed account, every single customer is also going through our KYC checks too. So we're very strict on that. Additionally, what trading platform are they using? Can we accommodate that? We have an entire risk team too that is monitoring every single customer account, because at the end of the day, as an FCM for us, we're a risk manager. So if one of your clients, you're on the hook for one of your clients, and we are too as that intermediary. So again, like I said, we are risk managers more than anything. So we're going to do the best we can to mitigate those risks, but also the educational piece with customers understanding that these investment products, they can lose money. So they need to be aware and be careful of that and fully understand the risks. And obviously, as a broker, that's your job to make sure your customers also understand that too.
That's good to have a lot of those things in place, I guess.
I just want to add on to that, like another thing that's been very important in my industry is disclosure of fees.
Okay.
To clients.
Yeah.
So
very interesting.
It's been very interesting. So like for us, we're very transparent, letting the clients know how much fees they're going to pay, because that's one of the key aspects that could throttle somebody's journey upward. So basically, we look at not only, I agree with you, of course, Molly, of course, there's a lot of different things. And I think fees on top of that is something that we consider for clients to make sure that they're not being charged too much, that they have a fair chance of getting a good return and still being happy with the service.
Yeah. Okay. Cool. Thanks, guys. So last question, really. I think, and then it'd be really fantastic to have some questions from the audience about this. But in terms of like the concept of like robo advisors, algorithmic trading, is starting to, are we seeing wealth managers adopt more of these type of trading strategies? Or is it sort of more longer term that they're looking to hold? Is that something that brokers are trying to facilitate and support wealth and asset managers with?
At least when it comes to the wealth management piece, at least in the U.S., I think they're a kind of traditional financial advising, which you might see where you are like with Shamar, talking to him, having a very personalized experience, I do think you're seeing kind of these bulge bracket banks also offering some type of, I don't want to say Robinhood type experience, but it's on their app, it's online, it's kind of like if you're going to TurboTax and they're doing your taxes. It's not quite the white glove service, but it is providing some type of financial advice and guidance. And I think, at least in the US, that's definitely becoming more popular, especially with younger generations that maybe don't want to meet face to face. I mean, my mom has never opened her wealth management app. I can tell you that. I don't think she's even opened her portal online. She gets paper statements and she calls her wealth manager and like has him make individual trades for her. I've never called my wealth manager once. He like tries to call me and I'm like, I'll send you an email when I have time. That's not me generationally.
Yeah, no, definitely. I can relate,
Apologies.
for sure.
So yeah, I think that in the wealth management space, probably not. Putting my like futures hat on, obviously that's like a huge thing. Is a lot of brokers are having partnerships with these algos, robo advisors, where maybe they're talking with these companies and they have an API set up and they're getting referrals that way. A lot of our introducing brokers we're seeing create those partnerships, and that's a way that they're starting to get business. So there's my two answers.
Thank you for that. Shamar, anything to add on that?
Well, in my traditional market, my old school market, right? I don't see us adopting any robo technology other than to speed up administration. But other than that, like Molly said, I don't see any robo takeover.
Okay.
Because people are individuals and everyone has different needs, different wants, different goals.
Yeah.
The robot can't tell you what you want for the future. Like
No.
so there's a disparity, and I don't think that robo advisors in my space would be a threat at all.
Okay, cool. All right, well, look, thank you. I've run out of questions now, to be honest, and really appreciate, you guys answering those. But yeah, does anyone have any questions in the audience that would like to find out a bit more about, what we've been discussing? Anybody?
I can ask myself a question.
Okay.
So I wanted to touch. Someone else is welcome to, but I can talk for as long as you guys want to listen. So I did want to talk about trends in wealth management, and just, I guess, something interesting that we've seen in the U.S. that I think applies kind of globally. And it's called the Great Wealth Transfer. So I don't know if you guys have thought about this. I really hadn't until I was reading this study, but basically the premises of this is we have a lot of high net worth individuals who are baby boomers, right? And they're starting to pass away and their wealth is starting to trickle down. So kind of statistically speaking, it's usually the male partners in the relationship that are dying first, and their assets are then being transferred over to a baby boomer woman, right, who has maybe never managed money before. And so understanding as a wealth manager your strategy when that wealth transfer happens, I think is something that people should be thinking about now, right? Because your approach towards this person who's been managing their finances for 50 years and is really savvy and understanding, it's going to look different. And even then, talking about then that wealth transfer going to their children who are millennials. And again, this millennial generation of women has the most single women that we've ever seen. So these are women that are now, for better or for worse, we're in control of our finances, right? And so maybe what me as a woman, a millennial woman, thinks is a good investment is going to look different from a millennial man, is going to look different from a Gen Z woman. And so I think taking age, this wealth transfer and age demographics into play in some of your strategies can be really important. And I see it in my own relationship.
Yes, I agree.
Definitely very relevant.
I agree with you, Molly. I definitely agree with you. You touched on some very important
That's a good
points.
question to yourself.
Because we focus on estate planning as well, like ensuring that after you're no longer here, that your family, the transfer of wealth is smooth and and tax-free as well. I've seen some changes happen in Mexico for the last 10 years. I get people come up to me all the time. Somos en Mexico, la gente no quieren ahorrar. Like the people they don't want to save money. That's what the idea is for Mexico. But I think that's changing slowly but surely, and people are moving more towards money management and wealth management in Mexico. I can see. Mexico has a large amount of wealth here as well, and even the people that are receiving the wealth, they're managing it and they're keeping it domiciled here in Mexico. A lot of my clients, and this is just the tips for the audience. A lot of my clients, sometimes they have accounts in the United States, and a little warning for people who are worried about how your capital gets treated after you're no longer here. So even if you're a Mexican citizen and you've lived your whole life here, and if you have an account, an investment account in the States, in the U.S., after a certain threshold, you get taxed up to 40% on your estate, which is not pretty. You're giving 40% to another government, even if you didn't live there. So, there's ways you can manage it. People are going to wealth managers to organize their finances, to have the proper positioning so that they can be happy and tranquilo in the future. Okay?
Okay, so thank you for joining us. So if there's no questions, thank you.
Any questions? Anybody? No? Thank you.
Thanks, everyone.
We want another question from Molly.